What the market needs to see right now is some kind of positive catalyst, whether that's from the Fed or from trade or some other development with all of these expectations being revised downward. In order to keep this rally going, they really need to see something better that's going to come out of it. And what I think they would like to see out of the Fed is obviously more confirmation that we're going to stay on hold, and then hopefully we get some kind of signal on what they're going to do with the balance sheet.
And John, there's been a lot of focus again on sort of the unusual nature of the yield curve. You have one-year treasuries barely yielding below 10-year treasuries. What's the fixed income strategy right now?
Well, one thing I would say is not only have growth expectations come down, which has contributed to that shift that Steve talked about, but the Fed's actually changed. You know, the Fed is done with their normalization. They're now talking about supporting inflation expectations. They're worried about inflation on the downside. They're talking about downside risks. So I think we've already seen the Fed change, and I think we're going to see more of that tomorrow. And I think that's a big factor. So, you know, it's not just that growth expectations have come down, it's the Fed has changed. The Fed is more dovish than they were previously, and I think that's a big deal. In terms of, you know, what's the opportunity right now, I think there's more opportunity in spread sectors than there are in treasuries. You know, spreads are still somewhat wide relative to treasuries. But I think, you know, I think I would really focus on that shift from the Fed. You know, we think that's in place. We think that's happened. And I think that's going to be supportive of a lot of things going forward.
You know, Liz, with the S&P 500 roughly 4% away from its record highs, is there anything else the Fed can do at this point that could keep this rally going? Or, to your point, does it have to be external factors such as developments on trade? And is there a point at which you think the Fed can be so dovish where it actually turns into a bearish signal for the markets?
Well, so I would start by saying I agree with John that the Fed has already shifted, and that's really what's supported markets all the way through the beginning of this year. I mean, into the end of last year, we had so much fear in the markets, and the only thing that changed really in December and January was the Fed rhetoric. So that's really driven us up this far already. Having the S&P up 12 to 13% already for the year is beyond what we expected for the full year. So I wouldn't be surprised to see a little bit of consolidation and a little bit of a pullback here before we might reaccelerate towards the end of the year. So is there a chance that the Fed could make a mistake, so to speak? I think right now the markets are pretty sensitive to policy errors, and there is a pretty big chance that the market is going to hang on every single word that they say tomorrow. I don't know that they can get too dovish. I think one of the signals that would happen is if we had a little bit of a pickup in inflation that the market didn't expect, then we would see the Fed probably come back to the table, and the markets wouldn't like that.
And John, I thought it was interesting what Rick Santelli said last hour about, you know, how expectations are in a way still so cautious about stocks that if investors realize, well, wait a minute, maybe I missed the Christmas Eve lows, I'm not going to get a good opportunity again. Could you get people starting to jump back in?
You know, from the fixed income perspective, so we're a fixed income focused shop, what I'd say is there's still an opportunity here. You know, we're looking at IG spreads that are still 30 to 40 basis points wide of where they were this time last year, especially concentrated in some of the triple B bonds where I know there's been a lot of chatter, but we think there's some very high quality credits that trade wide, and we think that's an opportunity. So I think to Rick's point here, you know, as global growth stabilizes a little bit and the Fed, you know, the Fed on hold becomes more entrenched, I do think there's an opportunity.